Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it's been another red day on the last street, although comparatively we have taken it less, harshly than our Asian and European peers at this point of time, Santo.
You're still trying to look for positives there.
Yeah, I mean, if you look at it, we are still...
I must commend your spirits.
Definitely. I mean, at this point of time, the outperformance is relative. Of course, we are still falling and we are still seeing a downtick in the market. But if you look at the Nifty and Sensex, they are seeing a little bit of selling pressure over the past half an hour. Before that, we were just about meandering near the flat line. But at this point of time, we have given up a lot of the resistance and are heading towards the day's low amid weak global cues. Also, if you look at the European and Asian markets, there the selling pressure is quite intense. European markets are down close to 2%. If you look at Germany, UK, as well as France, and they are for the obvious reason that recession fears are now quite considerably grown among investors. And if you look at the currency market, well, the rupee has again tumbled to a fresh record low against the US dollar, and it looks like we are going to close in record territory again, Santo, with the dollar strength being more and more inherent.
Finally, I think the saying that don't fight the Fed seems to be ringing true. Well, that apart, I think if you look at back in India, HNIs and other retail investors still seem to be very upbeat about small and mid-cap stocks.
Yeah.
Those stocks are still been relatively less hit compared to the frontline stocks where much of the selling seems to be coming. And partly there is a reason because most of the ETF flows go into the large cap fund. Now, traditionally, September and October have not been really good months for the bulls. At least September so far has turned to be quite a bit of a washout, and now we'll have to see how October plays out. That is again another month where mostly the things have moved against bulls, and it looks, at least for the time being, that bears may continue to have the upper hand.
Well, that is true, Santo. We'll have to wait and see how the rollovers happen for the expiry tomorrow. What sort of positions traders carry on to this October derivative series. That will be very interesting and will give you a little bit of insight as to how the October month will be shaping up. It's so weird, Santo, that just a couple of weeks ago, people were betting on a new record high come Diwali. But at this point of time, if we can just hold above the 16,000 mark, I think that in itself will be a victory for the bulls out there.
But CJ, and we were counting actually on some kind of short covering happening on the towards expiry.
That has not come through, definitely.
Yeah, a fresh bout. In fact, it almost looks as if bears may be emboldened to carry forward their short positions.
Absolutely. At this point in time, if you look at global markets, I don't think any other bet probably would work out in your favor. That said, let's quickly move on to some of the stocks that were buzzing in trade, and starting off from the pharma sector, Santo.
Yes, Torrent Pharma. Now, this company has been in the spotlight since morning. The stock has taken quite a bit of a beating after it said that it is going to acquire Curatio for about 2,000 crores. Now, the price that it has paid for Curatio, that has not been taken kindly by almost all analysts. Not that the stock was a big favorite, but at the same time, this acquisition, there seems to be a near unanimous verdict that the company is paying too much for it, which is roughly about 24 times the current year's enterprise value to EBITDA ratio.
Right.
And that is leading to fair bit of selling pressure here. The stock has been struggling quite for some time. It has not really gone past the highs that it had made in December, and given that this latest acquisition has not gone down well with the market, probably we could see this phase of underperformance perhaps continuing for longer. And also, let's not forget, the company had just been slowly bringing down its debt. It's still high at close to about 4,070 crore of gross debt. This acquisition, and while the company has not made it very clear how it plans to finance it, could lead to debt levels again rising.
Well, Santo, I think clearly investors and market does not seem to be very happy with the fact that the company has paid about 7 times price to sales, and also the margins also are not probably as appealing or as lucrative as probably one would have expected. But I think from a longer term strategic point of view, getting into or expanding a portfolio into derma products is something that probably could turn out to be in the favor of the company going ahead, because derma products generally tend to have a higher margin compared to some of the other categories, and I think that is why probably management is trying to boost its profile there, and hence we have seen this acquisition take place. Apart from that, I think longer term, given Torrent was recently trying to get its act right, especially on the balance sheet side, also it was finding a lot of traction on the revenue side as well. I think investors will probably move on from the disappointment of this deal and focus on the long term. Of course, in the near term, you could see the stock remain a little weak, but I think from a long term perspective, once that is priced in, I think you could see investors move on pretty quickly. The next stock on our radar, but before I go on to the next stock, I think the rupee again, Santo, has sunk to a record low. I think it's trading somewhere around 81.93 to the US dollar. So clearly now the 82 mark becomes very, very solid and becomes a very immediate prospect for the rupee. Reliance Industries. Well, why Reliance Industries? If you look at the stock's performance today, the stock is down about 2.5% in trade and has sunk to about almost a 6-month low at this point of time, largely because of concerns over the energy segment's earnings. But Santo, if you look at the level at which it is, the 2300 to 2370 zone is traditionally been, at least in the past two instances when the stock has corrected, has found a lot of buying support in that level. And recently also, if you look at what dealers have to say and analysts also have to say, they say that there is a lot of accumulation happening at that price point, and that gives technical analysts the confidence that maybe the stock could see an uptrend going ahead from this sort of level. Already the stock is in oversold territory. If you look at some of the stochastic indicators, they are quite extremely oversold and are near levels from which stock has in the past given a very, very strong uptrend in the short to medium term. So ICICI Direct, which is the retail side of ICICI Securities, they believe that the stock could see a gradual pullback from here and could go as high as the 2860 level, but before that it will have to cross the 2600 level. If that level is broken, then it can inch higher towards 2860 level. So this is one stock that probably the traders out there would want to probably keep an eye out on.
Well, just till about a couple of weeks back, the general view in the market was that since Reliance has been one stock that's really been underperforming, probably that could be the stock which would then take the Nifty to a new high. Things have not played out that way because overall this
I think banking names have probably disappointed on that front.
The mood in the market has changed quite dramatically. CJ, I would be looking for the 2800 mark, which has been the level at which Reliance has been repeatedly facing resistance, and if it manages to cross that, then probably you could see a sustained upswing. The positives of the company are just about well known. What is really holding back probably to some extent has been the policy which came a couple of months back on the tax on exports. Since then on, the stock has been underperforming, but if you look at the other lines of businesses, they're doing pretty okay at this point. So 2800 is the mark that I would look for, CJ. Next stock is Siemens India. The stock too has been under pressure in line with the rest of the market, but there are quite a few things still in favor of the stock, I would think so, CJ. Notably, its strong order book positions at about 17,000 crore, and this apart, in its recent con call, the management had said that it's seeing good traction as far as the short cycle project as well as medium sized projects that has been flowing into the company. Well, the longer term projects probably, while the company says that this year has been good so far, that is one area of concern probably even for the market, but there's no denying the fact that at least where the smaller projects are concerned, they're continuing to roll in. Also, the company's mobility business is doing pretty well at this point in time, and besides that, you're also seeing good demand overall. If you take a longer term view on industrial automation, that segment where Siemens has a strong presence is also set to grow further. Good June quarter numbers there, and it's most likely to be repeated in the current quarter as well. So this is something, CJ, one should keep an eye out for.
I think, Santo, long term probably things may be rosy for Siemens India, but in the near term, I think challenges are now starting to mount, especially if you look at the export side of the business. That is one side that probably will suffer going ahead because of the sharp slowdown that we are seeing in the global economy, and I think that is why you're seeing the stock come under relative pressure. Also, let's not forget that interest rates are rising quite sharply in India as well. RBI is expected to raise rates by another 50 basis points, and this may not be the end of it all. I mean, there are expectations that this rate hike cycle may stretch well into 2023, and in that sense, it could probably become a dampener on the entire capex recovery that everybody has been banking on, and that is why a lot of capital goods stocks like Siemens India have been rallying over the past year. Apart from that, if you look at from a micro perspective, execution challenges have still not eased for Siemens. This is something that the management has consistently pointed out, and with those sort of with the supply chain issues still lingering on because of China's hard COVID policy, I think that could itself also be a risk to earnings as well as the rally that we have seen in the stock going ahead. So for me, I think probably market is just about right in turning a little cautious as far as Siemens India is concerned. Well, the next stock and the last stock on my radar today is Ion Exchange. Well, this is one name that seems to have fallen off the favor list of market over the past year. If you remember 2020, 2021, there was a massive rally on the stock, and then the stock came off quite considerably as investors moved on to the next big thing. But I think recently the interest has picked up again, almost a 14% rally on the stock over the past 3 months, outperforming a large chunk of the market if you look at it. And the things that are going in favor of Ion Exchange Santo is the fact that its order book is quite strong at this point of time, nearly 3,000 crore, and it has visibility of almost 8,000 crore going ahead. So that really gives you confidence as far as revenue visibility is concerned. Plus, the government itself is quite, hell-bent on bringing water, piped water to a lot of households in India, and because of water treatment, efforts there, I think the visibility on order also seems quite strong for Ion. Edelweiss, which recently met with the management of the company, although they don't have a rating, but they do have a positive stance on the stock. They believe that Ion's margins will improve from Q2. Q1, yes, margins did decline, but generally Q1 tends to be a lean quarter for Ion Exchange. So going ahead, margins also is something that will improve for the company. And lastly, Ion Exchange is investing quite hardly in the chemical space, Santo. I think that contributes about 50% of their net profit and EBITDA. So clearly they are going into a capex binge as far as the chemical space is concerned, and that could also be a good growth driver in the coming years for the company.
Well, this is a very interesting stock, CJ. I've been tracking it for many years now.
Right.
Earlier, typically, whenever there's a bull market, you'll see the stock moving up very sharply,
Yes.
and then till the next bull market, nothing happens. Now, this is a stock where, had you been very, very patient, the payoff has been really terrific. But
Yeah.
it would call for immense amount of patience. And also remember, this is one stock where the late Rakesh Jhunjhunwala had got in pretty early.
Yeah.
Of course, he also had to
Yeah.
dig in his heel and wait for a very long time.
Yeah.
At that time, I still remember the chatter was that the company is doing well, but it's not still reflecting in
the earnings. Yeah.
in the earnings. And if you have a big investors like Mr. Rakesh Jhunjhunwala, probably things can change around. But that never really happened for a very long time. Still, there's been a massive re-rating of the stock over the last 2 or 3 years,
Yes.
where it just took off.
Yes.
That said, CJ, I think the big re-rating, the recognition that this company is good, that has now come through. So if you're looking for huge gains, maybe that won't just come. Now, we actually saw the whole re-rating move to a very different level. There was complete euphoria when the stock almost touched 3,000 rupees. There was all kind of chatter. There was some rumors about DuPont taking over the company and all that. And then, the stock suddenly lost favor. That was probably the time when it peaked out. Now, the big re-rating is now past, is how I would look at it. It's a good company. The market is finally recognizing the merits of that. But here on, most likely, since the story is pretty known and the market has valued it fairly, you're most likely to get market returns from these.
Yeah, I think Santo, probably earnings-led returns is what you are going to get from here. I don't think valuation re-rating is probably that much of a factor here. I think what you're going to see is very consistent, gradually rising stock, and probably one to have in your portfolio rather than to have something that will turn around and make a quick buck for you.
Well, last stock on our watch list this afternoon is Abbott India. CJ, this is a stock where if you're bullish on the Indian pharma market, then probably this is, with most other pharma stocks, the reason for the underperformance has been that the US part of the business is facing pricing pressure, and you have this US FDA inspections, weighing on
price erosion as well, a lot of issues.
All those things. But with Abbott India, that clearly does not seem to be the issue. And besides that, the company has been able to hold on to its leadership position. It has quite a few brands where it's the leader. Brands like Dufaston, Thyronorm, Dufalac, and Udiliv. It's managed to do quite well. Managed to hold on to earnings, its operating margins as well during the June quarter. And if you look at the balance sheet, again, quite clean out there, which gives it room for inorganic acquisitions as well. So all said, the stock has been under pressure. Pharma stocks exactly have not been the favorites, but this is something you should definitely keep an eye out for.
I think, Santo, a couple of months ago, Abbott was doing quite well, because at that point of time, the view within the market was that you should own India-focused companies instead of owning US-focused or export-focused companies. But recently, the past week or so, you have seen a turnaround of sorts, because a lot of India-focused companies are seeing a little bit of sell-off, whereas export-focused companies are seeing a lot of buying, largely because of the fact that the rupee is depreciating so drastically against the US dollar. So for those companies who are earning their revenue in dollar terms, that is largely going to be beneficial for their revenue as well as the margins. But if you look at it from a longer term perspective, clearly this is a a slow and steady sort of a tortoise to have in your portfolio. This is no hair.
I like
yeah,
the
exactly.
phrase.
This is a tortoise sort of a stock to have in your portfolio if you want it for the long game. It is no hair. It is not going to make you rapid gains, and the growth numbers also will not bring a lot of starry eyes into your portfolios.
I'll just beg to differ on that one slightly. See, the company has launched about 52 brands over the last 3 years, most of which have done fairly well, and it's got some aggressive plans going forward too. In the next couple of years, it plans to launch another 100 new products. So, and a good bit of incremental earnings is now coming from the new product launches.
Right.
So that assessment where you say that it's going to be a tortoise-like story, just hold your horses.
I think we will have to wait and see, Santo, because the Indian pharma market itself is not expected to grow more than 8 to 10% over the next 4 to 5 years. So how much of it will outperform the Indian pharma market remains to be seen. But given current evidence, I would not expect it to be a plus 20% growth story. It will probably be a 10 to 15% growth story, and that is the reason why I said slow and steady.
Well, with that, let's take a quick look at the market. There's not much change in the situation. The NSE 50 is at 16,857. That's still down about close to 140 points over the previous close.
And clearly, Santo, is the Nifty Bank that is dragging the market lower and lower. The Nifty Bank is now at the day's low, down about 1.5%. If you look at some of the other sectoral indices that are taking it on the chin today, is the Nifty Metal space. Again, with growth concerns globally, the Nifty Metal Index is down about 2%, led largely by Hindalco Industries. But the IT sector is holding on, Santo. IT and pharma, clearly two of the standout sectoral performers at this point of time, because of largely the fact that with the dollars appreciation or the rupee's depreciation, their rupee earnings are going to be quite strong, and their margins will also benefit a lot from that. So clearly the market is really playing out on that front. Surprisingly, Santo, FMCG index is down about 0.6%. This is coming on the back that crude palm oil prices have fallen quite considerably over the past week or so. So largely you would have felt that that is beneficial to their margins, but at this point of time, the Nifty FMCG index is down about 0.6%, and the small cap space is clearly outperforming. The small and mid cap indices are at this point of time much lesser compared to the Nifty 50.
But let's also not forget the valuations part as far as FMCG companies go. There's still some room for correction there probably, and at these points, typically when overall outlook on the market is very uncertain, you have prices coming off very sharply. Typically investors tend to hide in, or at least fund managers tend to hide in FMCG companies, because they can always say that this fell or we lost you less money than the rest. That's one way of, to some extent, reducing your losses even if not making money. But at this point, most of the stocks are fairly valued. I would say expensive, but again the valuations are always something that can be argued on. I would say that there is very little upside from these levels if you were to buy these stocks, at least in the short term. And that is why you're seeing some of it come off. Well, CJ, what have you got for us on the radar?
Well, Santo, clearly the main talking point for today would be US Federal Reserve Chief Jerome Powell's speech later in the evening. That is something that market will watch out for very importantly. Apart from that, tomorrow Germany's September inflation number data will come out. Now, Germany is the largest economy in Europe, so clearly it will set the tone for how investors view the European economy evolving from here on. And lastly, we have the expiry of the September derivative series tomorrow, so a lot of volatility will be expected. We already are in very volatile times, but because of the expiry of the futures and option series, you can expect high level of volatility tomorrow.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.